Ladies and gentlemen, this is Jimmy, your NLP coach. Let's talk today about a few things very important in the market. Let's talk about trading psychology, but also market psychology. And I want to share some words about ego and trading. And to make this live stream complete, I'm more than happy to take questions, and I'm more than happy to do any chart requests for you. Meanwhile, in the comments on YouTube, in the comments, drop your questions. I'm happy to take them. I will take them, all of them. And if I'm not able to do them in this live stream, I will do it in the next one. Meanwhile, think about ego, your own ego, and tell me in the comments if ego is a good thing or a bad thing. I will see you guys after the intro. Hi everyone. I'm gonna notify people that we are live. We are live. So how do we feel today, guys? All good? Stressed out? What's the situation? Tell me. Yeah. So ego and trading, guys. We all know that we have an ego, and later I will tell you from my profession, from a trading psychologist point of view, from a NLP point of view, if ego is really that bad or not. Well, one thing I can tell you, and that's this: you cannot kill your ego. You often see these strange statements from people, especially people with no any background in mindset or psychology, that you can kill your ego. Ego is not there to be killed. You cannot kill your ego. That's maybe like the first key takeaway I want to give you. I think to some people I'm new here, right? You guys don't know me. I don't blame you. I'm with the Burp Nest. I am responsible for a few things. One of these things is trading psychology. I often combine different NLP techniques with some neurology and psychology to help out people, to make them a better trader. We all know that if we want to become a better trader, we need a few things. One of these things we need is a trading mental framework. And that doesn't happen overnight. I can give you maybe the best trading system in the world with a solid win rate. But if your trading mental framework is not in place, if your trading mental framework has a lot of flaws, it's difficult, guys. It's really difficult to be a successful trader. I'm not saying that trading psychology is everything. There are some people saying this. I say that like trading psychology, maybe like the mindset is the binding. It's the cement you need. But you need to have a strategy. You need to have a system, and then on top of that, you need to have a solid trading psychology. You need to have like a solid mindset. So I also want to say I do this live stream for you guys. I'm not gonna ask you any money for it. I'm gonna take questions. Happy with that. But there's one thing you need to promise me, and that's this: you're gonna play full out. So you're not just gonna listen to me. At the end of this live stream, you're gonna write at least one point you want to work on, you want to apply, because we all know that knowing and doing are not always the same thing. Knowing and not doing is basically the same as not knowing. You don't want to be that fool who knows but doesn't do. I used to be a fool myself, so I can say this. We all know that sometimes we know what's good, but we don't act up on it. For example, we know it's good to take profit on the way up, but then some disturbing voices, internal dialogue, I call them, are telling us, well, don't sell now because there is some juice left. It can go higher and higher and higher. This is actually acting against what you know. That's even more dangerous than ignorance. So please Write down one thing you want to improve after this live stream. Uh, so let's talk quickly about ego before I move a little bit deeper into the whole concept. And as I said, I'm happy to take any questions, but also I'm more than happy to do any chart requests for you guys. So ego, from if you look to languages, I love languages. To Latin, ego it means I, and we know that your ego has a few functionalities, and one of the things that your ego is trying to do is to protect you, and it's also trying to protect your self-esteem and your self-importance. We all have self-esteem, nothing wrong with that. We all have self-importance, really good, nothing wrong with that. However, if your self-esteem or your self-importance is attached to something that's outside of your control, then I would say this is an extremely bad thing, extremely bad, because something outside of your control is basically determining the quality of your life and how you feel, think about yourself. So if you really like, if your self-esteem is low because you have a low P&L, I can understand like the pain of losing money. I can understand the frustration about it, but what you're basically doing is like you let the market dictate something you don't have any control about of to dictate how you feel. And that's a really dangerous thing because this will open the door to a lot of bad things like revenge trading, deviating from your system, um, moving, shifting from one trading system to another system, not being consistent. Exactly that which you need to avoid. I would say it's like your trading self-esteem, your trading self-importance should come from other stuff. And you might ask me like, what kind of stuff? Well, it should actually come from your behavior. So I often make the distinguish between self-discipline and self-control. Self-control is basically everything that has to do about avoiding the bad behavior. Self-discipline is all about doing the right behavior. Attach your self-esteem to that, to by the amount of doing the right behavior instead of your P&L. Go away from your P&L. Focus on the process. The more you respect the process, the higher your self-esteem should grow. It shouldn't grow because of your self-esteem, because of your P&L. I hope this makes sense. If it doesn't, drop me a comment, and happy to uh, take that. Oh, wait. Wait. There's something. Yeah. Wait. Yeah. This is good. Today I'm working with a Windows laptop. I spilled some water on my MacBook. Very stupid of me. So now we talked about that. I want to say like the ego in itself is not a bad thing, and the ego in itself is not also a good thing. It has a few things. So one of the functions, the primary function of your ego is consciousness, but it's also there to protect you, and it's responsible for your self perception. So, if your ego is attached to your P&L, it's trying to basically to protect your P&L. Other than cutting your losses and locking in your gains and cashing out, there's not much of a influence you can apply to increase your ego. If this makes sense. So your ego often gets activated if it feels insecure. Uh, what is this, guys? Yep. And your ego can kick in when you are overconfident. So at this moment, I don't think a lot of people are overly confident unless you sit on a lot of cash. Cash is king now. Um, so when we are enduring a lot of pain and frustration, and we're angry, the ego, it gets, your ego doesn't like that because it's really bad for the self-esteem. I don't think that it's a really good idea to trade while your emotions are really high. I'm also not that type of person that tells you that emotions are a bad thing or a good thing. Basically, they're pretty much neutral. Emotion is just there. It's actually a biological expression. I'm also really angry what happened with FTX. I lost money. Not gonna lie. I used to trade on FTX. I'm actually at a stage that, last week I was angry, right? Last week I told myself I am angry. This week I managed to lower the emotion by telling myself that I feel angry, and these two are two different things. Last week I also um, decided to not trade a lot. I was also recovering from COVID, and this week I finally started to trade because I know when to trade and when not to trade. Not trading is for me, like, when I shouldn't trade is when I have emotions that are unprocessed, because I was really angry on FTX and Sam, not because they just scammed me, but also people from Africa trying to, poor people with not much money trying to make a living out of trading and crypto, or people who are trying to fight inflation, people trying to, increase their quality of life. All of them, millions of people, have been scammed, and probably maybe you're one of them. And that's exactly what this injustice made me really angry, and I took time to recover or to lower the volume of this angriness, because I know trading while I'm angry is not a really good idea. But sometimes you need to have this conversation with your ego. I think now there are a lot of opportunities. My game plan is to not trade, on a high time frame. I try to, maybe I should just go to the charts. Um, I'm not really in this position that I want to, build up a position or do some active swing trades. My strategy for now, and I think all of you guys should have a strategy, is you should have a plan, obviously, always. So for me, my plan, it doesn't include swing trading. It doesn't include now, at this moment, at least not with Bitcoin, to build up a position for the coming years. My plan is actually to trade low time frame, because I know I can then trade without having a really strong bias. I just don't care. Is just trying to stack USD dollars. That's what I care. But if Bitcoin goes down, even, it's going to test new lows. I have marked for myself. Wait, why? Perhaps you guys know this, but sometimes the laptops goes from it toggles here from lock to not lock. I always use lock, especially low to high time frame. This is basically like this gray area is for me a level to dollar cost average or to buy crypto, because I do expect here some bounce. This level for me has a lot of confluence. One volume profile, or maybe more importantly, the horizontals, of course, and then the volume profile. And if you would apply Fibonacci from here, because I do believe that this whole movement started from here, it's not that like this far away from the 618 Fibonacci level. So this gray area is for me a really interesting place to buy Bitcoin. And this place here, for me, this is actually in the middle of nowhere. So if you look to market psychology, and especially the horizontals, this used to be a strong what? A strong support level, a pretty strong one. And then it lost this level. So what you often see is like the price tries to test this level and it got rejected. This is what we call like this is a textbook bearish retest, and then it went down. There are a lot of people saying, okay, it's still holding. I'm impressed. Bitcoin is doing pretty well. Well, Bitcoin is doing pretty well, and Bitcoin decoupled from the S&P. And that's actually the reason why Bitcoin is doing well. Oh shit, look to this opening gap. Oh, maybe just testing this level. Oh, so this is the S&P 500, by the way. And what we also have seen when everything went down there and Sam screwed us, the dollar index went down. If the dollar, if like the whole FTX drama did not happen, then probably we would have tested higher. We would have tested most likely higher, like the high range here, probably 22K, 24K, but it didn't happen. So if the dollar index is going to go up and something happens with the S&P 500 and the Nasdaq, probably this will go lower and lower. What you also need to understand is people are really anxious. And by the way, one of the reasons why I think like this area is a pretty, solid area is also because of we went down, like the range here is like from, let's say 2480K. There's a difference of I don't know, you do the math yourself. It's 6,000 something, and if you would apply that on here, then the logical, like your target for, if you would trade this rectangle, then your target would be like around 13K. But more importantly is to see if it really aligns with the horizontals, well, more or less, and then you have also this volume profile. So people are telling you, well, the market can't go down because everyone is expecting 12K. Well, I do believe in the contrary opinion, but this often works in a uptrend rather than in a downtrend. What you also should know is when we are going down, I mean, if we're going down, we're not going to talk uncertainties. If this happens, what happens then? Panic, fear is going to increase, right? What also kicks in is recency bias. So recency bias is basically your brain is more sensitive to the most recent information. So if everything goes down, our brain tends to think that everything will continue going down, and you will neglect like key, pivotal, crucial price levels. Of course, it can go down. It can go. It can, like, technically. It can go down as much as it wants. But that's also like your ego is trying then there to protect you. So if you see things going up, like here, also people here, and I was one of them, is and I basically ignored my system here, to be honest. I will tell you why. Recency bias also kicks in here in this, like in this major big, oh fuck, um, uptrend. So here people, they say, or they start to think everything goes up, so it continues going up. You don't want to fight the trend. I agree. But you also don't want to be part of a overly crowded trend. So if everyone wants to be part of that trend, then that's actually a good reason to be extra conscious about the market. So for me to see, it's okay if for you guys, TA wise, if you try to find um, bearish divergence on the daily, sometimes it just doesn't matter if it crosses the thing. The whole thing is with the divergence, it should make like lower highs, right? And here it makes higher highs, like this. Oh, where is it? Right. This is a good example of a bearish divergence. Everyone was euphoric. Everyone wanted to be part of this uptrend, including myself. And then it tanked, right? And then here it made recovery, and and everyone wants to be part again of that trend. So one of the key questions you should ask yourself, and this is a little bit market psychology, is when and where does recency bias kicks in? I believe that recency bias will kick in here. I think, and even like below this gray box, I think people will capitulate around here. That's what I believe. But I could be wrong, and I'm prepared for that. Often when you see price escaping like the rectangle, the longer it's outside the rectangle, it's outside this range, the more likely it will continue going up. There is a probability that this goes up, but with the current situation with inflation, and with a lot of uncertainty with the Fed, FTX, I personally doubt that Bitcoin goes back into this range. It would be nice, but I wouldn't bet a lot of money on it, to be frankly with you guys. So recency bias. When and where do you think that recency bias will kick in? This is already a downtrend, right? Obvious one. You don't want to fight a trend, but at some point there will come a reversal. And if nobody wants to be part of a trend, there could be like long consolidation, could be, I don't know. But ask yourself, when and where does recency bias kicks in? And should I go against that recency bias? That's really difficult to go against, to go against the crowd. And there are a few reasons for that. One, going against the crowd doesn't feel safe. We always like crowds, and we like to be part of a community, to be part of a crowd. Why? In the past, if you were abandoned by your community, you're left alone. There's nobody helping you, so you're easy prey. There are hunters, thieves, animals trying to kill you. You always like it's in our genetics, it's in our DNA. We want to be part of a community. And this is why it's so damn difficult to go against the crowd. In trading, sometimes you need to do the opposite thing. There's a big crowd trying to be part of a trend. It doesn't matter uptrend or downtrend. Try to think a little bit differently. Of course, Just saying, hey, everybody thinks it goes down, um, is in itself not a reason to buy, because then you don't have your TA in your favor. But if you have TA in your favor and FA and also psychology, then you can make better quality decisions, if this makes sense. Also, what happens is when when you have a certain bias, it doesn't matter what kind of bias, like up or down or sideways, could be also bias, is we find it difficult to switch from buys. We find it difficult to go from bullish to neutral, or from neutral to slightly bearish. We often, get stuck, gets in a certain bias, and the forcing from your high time frame bias is difficult. Even for me, it's difficult. So for this, how to overcome this is to ask yourself, where are the points of potential reversals? Where do I think a reversal might happen? And why do I think so? And how will the market react upon that? Because once you have a bias, confirmation bias kicks in. So you'll try to find information that supports your bias, and you will distort or delete information internally to justify your bias. And in NLP, we often use like this NLP communication model. So we tap into this world through our five senses, based on our filters. So one of our filters, emotion, how we feel, high impact events, your personality your characteristics, your memories, meta programs, and so on and so on. They will basically act as a filter, and then you will delete information, distort information, or generalize information in such a way that it fits your bias. So your bias should be questioned and challenged often. If you don't do this, if you don't challenge your bias, you basically married with your bias. And we all know that market goes up and down. And if you have this bearish bias and bullish things happens, then you will not accept the bullish thesis, and also the other way around. So you should be flexible with your bias. Don't marry your bias. Your bias is there to be changed and to be challenged and to be questioned. If you have a really rigid bias, um, you can make really costly mistakes. Um, are there any questions, ladies and gentlemen? I think I covered a lot. I think enough. I also want to make you guys aware that we have a trading conference going on next week. I will then talk way more about trading psychology. We will talk more about TA and FA, market cycles. We have already lined up guests, people with a CMT background, people who know their stuff, to help you guys. I think most of us, we lost money. That's not a secret, right? And there's nothing wrong with that. Like in trading, you're supposed to lose money, especially if you don't have like a solid system. Uh, um, so I think like all of us, we can make a backup plan, or I mean a comeback plan. And I don't think it's too late to make a comeback plan. I think the best time to make a comeback plan is actually now. So I highly encourage, ladies and gentlemen, to not give up. This is not the time to give up. This is actually the time to learn, because I know you're angry, and most of you are frustrated or feel frustrated. I'm one of them, and I just don't accept defeat. I cannot just accept defeat. I only accept another round. I only accept growth. I only accept learning. I only accept education. I only accept moving forward with positivity. This is actually the moment to really learn, guys. This bear market can last for a long time. I just checked yesterday. Bitcoin halving. You know when it is? 500 days from now. 500 days. A lot of days, guys. 500 days. 500 days. Imagine like the next bull cycle, if it's going to happen 500 days from now. 500 days from now. It's a lot of days, don't you think so? It would be somewhere in 20. Wait, where's this? March, April, May would be like the next halving. What could you do in so many days? Doing nothing, just scrolling on Twitter, scrolling on TikTok. That's an option. That's a possibility. I wouldn't go that. I wouldn't go for that option. If I were you guys, I would open the books. One of the books I would recommend is CMT level 1. It's the beginner's book of CMT. CMT stands for Chartered Market Technician. I do believe that it's not what I believe. It is actually the recognized way of applying TA and understanding market, understanding interest rates, understanding inflation, understanding correlations, understanding moving averages, and what RSI really is. I think it's a really good book, CMT. It comes with a price, right? Such a book comes with a price. I think the book is around 200 something dollars. But I always say knowledge comes with a price. Knowledge has a price tag, but so does ignorance. Your ignorance also comes with a price. And believe me, the price of ignorance is high. I mean, imagine how much money you could save if you have invested in high quality education. Imagine how your life would look like if you invested a lot of education 500 days ago. All right, let me close the door. I have some hyperactive kids playing here. Um, so, guys, are there any questions? Um, thanks. Yeah. I feel more comfortable now in scalping low time frame trades. Open a position. I mean, even if you're going to scalp, or I mean, low time frame, but you need to have a system for that. I still think like you can make like a decent R. I shared this setup. This is the setup I'm mostly looking for. Wait, this should be gray. I'm not really, eager to open like new positions, but if price can, go through this gray box, I would happy to open new longs. I see this as a resistance, and but I also want to see like an increase of the RSI here. As we talked, like this 18 something K, 18.2K is a really strong resistance level because it used to be a solid support level for more than 150 days. Oh wait, I'm doing something wrong here. Where is it? It should be here. I'm not, happy to, not really motivated to open here like new positions. You could be like, you could open here, target here, but like for me, like the high convincing setup for me would be if price goes through this gray box. I would happy to look for longs, and this is a setup I'm looking for. But it depends on how it evolves here, and the RSI must make here like a higher high. it should take out these highs here, especially this one. Preferably, it should pierce through this gray box. And then you have a 2.5R. I mean, there's a lot. You can make a lot of money on if you have a system. No, this is not the time to to hodl and to buy. Yeah, you can hodl, but it should go with a plan, right? You should know where you're wrong, and if you're trying to build up positions here, I can understand that you want to build up positions on some altcoins, but for God's sake, have a plan and know where you're wrong. And if you're sitting on cash, um, don't use all your cash for to buy everything on one. Let me, like, for example, Link. Imagine you're bullish on Link. Um, yeah, it's still this range. Let me go. So the funny thing is, if you would buy Link, you should actually ask yourself for each altcoin who is in loss, who's actually not in profit. So basically, everyone who bought from here to here, maybe they break even or a little bit of profit. So a lot of people they lost money. Now, if you, for example, this is an example. If you believe in Link, in Chainlink, by the way, I lost my whole Chainlink back on FTX. That's why I charted Link myself. Is buying here could be like you will buy like range low, but it's a really challenging environment. I would love to buy Link here in this green line, but then I want to see a bounce. Then I would be happy to accumulate Link here. Let's say here. If I would have, if I would allocate, let's say 5K for Link, I think it's not wise to buy 5K of Link at this level. I would try to play it safe. Then it would be like maybe to scale in, I would invest maybe $1,000 here, and then I ask myself, okay, what's the next price level that would be really interesting for me to buy Link? Wait, that's the wrong feature. Wrong one. It sounds maybe not realistic, but 1.60 would be also a really interesting level for me. So if I would try, if I had 5K, spending 1K here and having the remaining, like the 4K, if it goes up and the market reverses, right, it goes up, I would happy to to build up my position. And if it goes down, I would check and want to see how price responds here, or maybe even here, this whole this area. If I think there's enough strength here and sellers are depleted, we talked about recency buys. People think it will continue go up down, and that trend, and that's the how do you call that, the majority. Then I would feel okay to buy here. I wouldn't mind to buy Link here. So anyway, if you're sitting on cash, actually the key takeaway I want to give is don't buy stuff, don't buy anything on one price level. Try to scale in and try to also understand the price levels. For me, it would be buying here and buying here would be for me logical. I can. This is also in line with my risk management. Let me check accuracy. Well, signal. So We do give signals on Discord. We have a TA team. We have Jay. We have BC Richfield, Buzz, Razun, Pedro, and Adrian, Crypto Burp. But we are extremely transparent with the calls. I cannot recall like the win rate, but we publish every month the win rate and the amount of calls we've produced. If you're interested, just go to Discord. It doesn't cost you anything because there's this channel. The name of the channel is testimonials, and then you will find a link, and it will direct you to a sheet with the monthly win rates. We don't have a 100% win rate. If you're looking for a 100% win rate, I know most of you know that 100% win rate is basically impossible. So the win rate, I think last month was 70%, something like that. We're not only giving crypto calls, but also legacy calls, for example, forex or indices. But yeah, you can check it out yourself. Yeah, my feed. I think I just used the normal volume profile settings, nothing advanced. What's really relevant is this. So yeah, nothing special, nothing special. I mean, this is just the visuals, right? Like how it gets visualized on TradingView. You could do 400, you could do 200. By the way, I'm not the volume profile. Like you could use like the volume profile to, especially if it aligns with horizontals or Fibonacci levels, especially at 618 and 786. I find them pretty reliable, especially high time frame. You see like this gap here. You don't actually need a volume profile for that, but you could also see it here, right? Like this was basically like a straight line, so a lot of inefficiencies, and this just displays the inefficiency. Often, like the gaps could get close or get filled. I mean, and hence the reason why I believe that 12K, 13K is a logical target, as explained. It's not because of the horizontals. It's important, most important, I think. Volume profile is important, but it's also because the distance between range low, range high. If you would subtract them, then you will come close to this gray box. Any other questions, ladies and gentlemen? Look, I am a trading psychology coach. I'm really happy to take any trading psychology related questions, or if you guys have any questions about the market or chart requests, let me know. Otherwise, I will call it a day. And yes, guys, be smart if you really want to level up. I've seen the program. The program is really good. Sign up for the Congress. It will cost you $0 and 0 cent. If you're not happy, you will get a refund, $0 back. But we have lined up some big names. Going to teach you how to trade, how to identify cycles, how to apply market psychology, how to really use on-chain analytics, and much more. Also, how to use classical patterns. I myself, I did CMT 1, also 2. To be honest, I failed for 2. But I personally, I like to use classical patterns because I find them actually reliable. My favorite one, I actually have 2. It's actually the rectangle. This actually really easy because you have bounds, like you have a range high and a range low. That is actually the base, but you have also shortfalls, maybe something else. I can explain in the next call, I mean in the next live stream. And then there is this falling wedge combined with bullish divergence is also one of my favorite classical pattern. Um, the falling wedge, the rising wedge also, especially if the rising wedge taps into a key resistance level. I like to use that, especially when there's bearish divergence. It gives me a pretty good edge, but for that there needs to be a trend. Otherwise, it's you won't get to see a rising wedge. I mean, not on a high time frame at least. So yeah, a lot of good things are going to happen on the Congress. I would say sign up. It's free of charge, and I think it's going to help you to work on your comeback plan. As I said, this is not the time to sleep. This is the time to work on yourself and on your comeback plan. I lost also a lot of money in 2017 and 18, and then I learned the importance of balancing. So balancing is basically try to keep a to give your if let's like your balance, like let's say 50% Bitcoin, 20 and maybe that's a better example. If your portfolio, you started with, let's say, 50% stables, 25% Ethereum, and 20%, 25% Bitcoin, for example. If you have more stables than you originally had, then you rebalance. And also also like when Bitcoin is going up a lot, and you're focused on rebalancing, then you automatically are taking profit. I think rebalancing is really overlooked. I think it can give you a lot of benefit, and that helped me to um, to take profit and to have enough USDT to sit out this bear market. And this USDT, I use it for liquidity mining, staking on different decentralized protocols. So it also generates passive income, which makes this bear market for me personally um, pretty comfortable, to be honest. If I haven't made like the bad mistakes I made in 2017 and 18, and I gave up, I would have nothing right now. But I chose to not give up. And I encourage you guys also to not give up. This is the time to learn, really, to understand these centralized protocols, to understand passive income, low risk passive income. Believe me, they are there. This is also the time to keep your eyes open for potential gems. I don't invest a lot of money in gems. And if I do invest in gems, then it would be, an X% of my trading portfolio, let's say 2 or 4 or sometimes 5%. If it goes down to zero, then I just lost 2 or 5% of my normal trading portfolio. That's how I approach gems, because they do come with high reward but also high risk, and I try to protect my money and not to invest too much money on gems, because I don't think, especially now, it's not worthwhile, to be honest, to invest too much in on gems. It's now actually it's time to invest in you. You are the most important asset, period. Okay, guys, thank you very much, and would love to see you guys next time. Bye bye for now.